Good morning, everybody. Man, we got a good crowd in already. We're gonna start right in because this is the last show of this week. It's a long weekend. We're all gonna go out and in our backyards, evidently, for Monday. But what the heck, we get something. So good morning, everybody. Welcome to the 36th episode of FinTech Insider Breakfast Show. US. I'm Sam Maule, 11 Best Managing Director in North America. I'll be your host for this morning's show. Do let us know where you're watching from. Click that share button. Hit the like buttons. Let your friends know that you're watching this. And please subscribe to 11FS on LinkedIn so you never miss a show. First off, as always, 3 quick stories over the past 24 hours that caught my attention. And it should have yours. So Fortune reports another 2.4 million initial unemployment claims were filed last week in the 9th straight week, with jobless claims topping at least 2 million. This now means 38.6 million have filed for unemployment during the pandemic, greater than the combined population of 21 states. That's a nice reference. I don't know about nice, but that's a great reference piece. Good job, Fortune. According to another one, and according to an article in the New York Times, business insurers are facing huge pandemic losses. The pandemic is producing enormous losses for business insurers worldwide. It should be over 100 billion or greater, said Evan Greenberg, the CEO of the insurer Chubb. We talk about an industry that needs to be disrupted. And last but not least, over at Forbes, they have a story running about Square. COVID crisis may accelerate Square's move into consumer banking. Credit Suisse estimates that the Cash App's direct deposit users have more than doubled in 3 months, reaching 1.2 million after Square has been encouraging people to sign up to receive their government stimulus faster. Not shocked at all by that. Now, let's jump into the show because this will be fun. Today, we're joined by Shamir Karkal, as CEO and co-founder of Sila. I have been calling Shamir one of the OGs. If you're over 30, that means original gangsters. One of the original people when it comes to fintech, and you'll see why as we jump into this. So we're going to talk a little bit about Sila, its mission to accelerate next generation of financial evolution, and then we're going to talk about whatever Shamir and I want to talk about. To be honest, Shamir, man, it's good to have you on.
Same here, Sam. Same here. Man, we both are OGs now. Huh? It feels crazy, but this space is so different than it was 10 years ago.
It's weird, isn't it? You actually are. We've actually survived this thing. So I got to tell everybody the first time I ever saw Shamir in person, it was at either, and you can tell me which one it was either the first or second Money 2020. I don't remember which one. You were on a panel. I went to go sit in the audience, and you came on stage. You weren't the facilitator. You came on stage with a tequila bottle and 5 shot glasses. And everyone's like, what the hell? And you just sat them down in front of everybody. And when you went to do introductions and it came to you, you said, all right, I don't want a bullshit panel. So if anybody up here sells, they got to take a shot. If anybody says anything we know is bullshit, they got to take a shot. If from the audience, you come up to ask a question and it's stupid, you got to take a shot. And I remember sitting thinking, this is the greatest thing I've ever seen in my life.
That was the first Money 2020, although I've done it at a few others since then. And the moderator was Madeline Bocchio, I think. And she went along with it, and she was quite happy. We discussed this beforehand, and she was into it, and it was a fun panel.
Yeah,
tequila helps with that.
It's one of the
little early in the day today, though.
The thing is, it was 10 a.m. Everybody, it was in the morning. It was before lunch. I remember that.
It was.
Yeah. So I remember thinking, damn, that is the best thing I've ever seen. And that's when I knew Shamir was different than your typical person in fintech. We'll talk about your background a little bit, but I actually just want to jump right into your latest venture and what you're doing at Sila. So can you kind of describe what the company is, what you focus on?
Sure. So kind of, the genesis of this all came out of my own frustrations being a fintech entrepreneur, right? Yeah. If you are a developer and you wake up tomorrow in San Francisco or Shanghai or Sao Paulo, and you want to build an email application or an SMS application or a voice over IP application, there are libraries, SDKs, there's a whole ecosystem of providers. You can get that built in a couple of days max. Yeah. And the big problem is competing with G. That's a really solid product, right? As soon as you get to programming with money, it's almost completely flipped. That it really matters whether you're in Shanghai or San Francisco. There are no open protocols. There's almost no APIs, SDKs, and there's no ecosystem of providers. But if you can spend the years and actually finally manage to build a fintech app, you'll realize with Bank of America or Chase isn't actually that hard. The hard part is actually getting into the industry and just shipping that product, right? And that's the problem we want to solve at Sila. So our vision is to make it easy for any developer out there to quickly build and ship a fintech, crypto, embedded fintech, whatever you want to do that involves programming with money. That's probably still going to be a little bit harder than programming with with SMS or SMTP, but it's just because of the regulation. It shouldn't take years. So Sila is a platform company. Our core product is a REST over HTTP API platform, which does three things. We just launched 7 months ago, so it's very much an MVP. We do ID verification in the US, so we can take Sam or John Smith or Jane Doe's information, verify her identity. We can link a bank account with for her, and we work with a company called Plaid so that we can securely get routing and account number. And then we can process ACH transactions. So once Jane Doe is onboarded, we can debit her account, credit her account, or transfer funds between Jane and John and Sam. But on the back end, we actually have a distributed programmable ledger. So every time we onboard Jane, we automatically create an Ethereum wallet for her, which is really just a public-private key pair. When you debit Jane's bank account, we credit tokens to her wallet. When you credit her bank account, we debit that wallet. And in between, you can actually program with it. So you can write a small, snippet of code, run it on Ethereum, and actually use the Sila token as a variable in your program. And you can do some really cool things with programming with money that way.
So I'm going to geek out. I'm sorry, folks. I am not Simon Taylor. I can't go deep on DLT and blockchain, but I know enough. Why did you decide to go with Ethereum?
Mostly because of the developer ecosystem. It's the one place which has the largest number of developers hacking in lots and lots of different things, right? And it does have some emerging standards in the form of like ERC20, like ways where you can standardize your kind of interface of your smart contract and have other smart contracts plug into it. Now, it's still very early stage, and the most of the applications in Ethereum and in fact across all DLT have much more to do with sort of like trading of assets, crypto tokens or securities. But there are people who are trying to use those platforms to sort of build real world applications, and the promise of like programming with money is really powerful.
So one of the things I love about you've been doing this for a while. We kind of joked at the beginning that we're both kind of OG now. I'm just old, but you've actually founded, and you're a serial entrepreneur. And you've also worked at scale, by the way, at incredibly large companies. So, BBVA being one of them, you've been in the consulting space. So you've done this at scale throughout your career. But so you understand the importance of simplicity in describing what a product does. I mean, you just get it. And I love brands that understand that. So I watched a video of you and you described Sila as a single API that offers infrastructure as a service. So can you dive into that just a bit deeper? I know you already touched on it once.
Completely, right? Like if you're building a fintech application or any type of application which involves money, there's a subset of the kind of the regulated payments and banking space, which is unregulated. And that's where you find companies like Stripe and PayPal. It's online payments. It's a deep, liquid market, and you have a bunch of options there. As soon as you're outside that and you're doing like wealth management, insurtech, fintech, real estate tech, crowdfunding, or 20 other things which have regulation around them, you'll suddenly find yourself having to, the Stripes of the world won't work with you. And now you have to go find a bank partner, find some processor who has some technology, figure out how to connect them up, build your own API layer on top of that, and then build whatever fintech application you want. That's how simple, that's how all the kind of the older fintechs, which are like more than 3 or 4 years old, they were all built that way. What's changing is a lot of people have realized that having that programmable API layer really transforms the speed at which you can build and also the speed at which you can iterate, because the name of the game is always product market fit, right? You want to get your product into market, and then you can figure out whether there's a fit. If you spend 2 years just getting it to market, you really don't have that much time to optimize it, right? So the power of that infrastructure layer is the ability to say, hey, I just want to download an SDK, plug it into my Python or Java program, and make a few API calls. And now I am taking money from here, holding it for a week or a year or a day,
Yeah.
doing something with it, and sending it there. And that should just be 10, 15, 20 API calls, right? And that's the power of infrastructure and fintech infrastructure, is sort of abstracting away all the underlying complexity. The key point in that is like, it's a problem. It's a promise of AWS
Hmm. Yeah.
or Twilio, right? It's like abstracting away all the complexity, giving you a clean interface, and letting you get to market really rapidly and iterate in market rapidly. The thing is, it has to work well, and that
Right.
I think is one of the things that a lot of people who jump into this don't realize, is that there's a lot of complexity in finance. A lot of the underlying systems are old, they're broken. The payment systems, I mean, ACH in the US hasn't changed in more than 40 years, 40,
Yeah.
whatever, 45 years. And so you have to know all the edge cases and the ways in which those systems fail and be able to handle them well. It's not just about building an API, creating a nice sandbox, and then you're like, hey, God forbid one of your customers actually scales and gets to millions of users. If it all
Yeah.
falls apart at that point, that doesn't work, right?
Yeah.
So the infrastructure is extremely important, and it's a necessity, I think, for this whole space to grow. And I just think of it, right? Like the entire first wave of the internet up until this point has been all about like advertising, right? Like
Yeah.
Google and Facebook and so many other companies make money off of advertising, and they've transformed that space.
Yeah.
The
I mean,
global advertising industry is 600 billion in revenue. Finance is 15 to 20 trillion in revenue. So then the fintech revolution is barely starting, and I think it's going to be way larger.
so here's one of the things I like about you, Shamir, because again, like I said, you've been doing this, forever and a day, and successfully. Let me throw that in there. There's a lot of people that have been doing this forever and a day, not successfully. So, and we've all been through those highs and lows. I was watching a video of you talking about Sila, and you said this: "We're on a mission to mobilize the next generation of innovators." Great line, by the way. I love that. So, you are one of the early innovators. Are you on that mission? Are you still doing this in Portland? Is your team
Yes,
still based in Portland?
I
I love.
am.
Shout out to
I
Portland. There you go.
love this place, man. I just moved. We moved Simple here, my last startup,
Yeah.
8 years ago, and I only been here a couple of times before I moved here. But it is a great city. It's close to Seattle, only a short flight away from San Francisco, and it has a really interesting emerging tech and fintech cluster. I recently did a poll, and I think there are as many broker dealer fintech startups in Portland as there are in New York. Now there's like five, so it's not a
Yeah.
large ecosystem. But I'm like, how did that end up happening? And some of it there's a little simple mafia forming, but some of it I think is just a lot of people don't really enjoy California and especially the Bay Area anymore. And Portland has a really great trade-off between sort of life and still enough hustle to get things done, right?
Yeah, it was funny. We do this. I've told the audience this a couple of times. I do this like Wednesday night happy hour, virtual happy hour on Zoom, where I get like 7 people together, kind of from banking, but fintech, and I don't care outside of it. We just talk, no topic. We just kind of see where it goes. And one that came up on Wednesday was, this whole idea of folks leaving San Francisco and New York, because we're seeing that, right? And now this whole concept of work from home, which I know you're laughing at when I say that. For everybody keeps asking me about the green screen, it's suits. It's his closet that's behind Shamir, and he hasn't worn
Yes.
those damn suits in what, 15 years, probably 10 years.
I trot them out like once a year, but yeah, I mean,
There
there's
you go.
many in there. I'm not even sure I'll fit into anymore because I haven't tried them in a decade. And
I'm
yeah,
with
this
you.
is the one part of the house where there are two doors between me and the kids, and so this is where I have the highest likelihood of having no interruptions.
So I was telling people, do not hack that green screen. Do not, and evidently they can't. So well done. So I'm proud of you, Shamir.
Thank you.
But getting back to this concept of Portland, we are seeing folks moving out of New York. We are seeing, move.com has been saying the numbers are incredible that they're seeing this concept of work from home. So besides Portland, because I do love Portland, are there some other places across the U.S. you would look at and go, yeah, I could see that stepping up? I mean, Austin,
Yeah,
obviously.
Austin, obviously. I think people don't realize it, but like a lot of like New York fintech actually moved to Brooklyn and is based
Yep.
out of Brooklyn now. And you're like, is Brooklyn another city? It's not, but it is very different from Manhattan, right? And the same thing you see happening in like Oakland versus San Francisco.
Yeah.
I'd say Denver. I'm hearing about Salt Lake City as well. There's this whole set of cities which are sort of between, metropolitan areas between like 500,000 to like 3-4 million, with
Yeah.
like Seattle upper end of it, and I don't know, maybe some like Charlotte, North Carolina at the lower end of it. But it's like in between where it's like, hey, we still want to be in a big enough city that you can actually hire people, you can actually, find the talent you need, but at the same time, it's a much better sort of trade-off between quality of life and uh, and access to everything that you need, right? Like the big
Yeah.
problem tends to be in places like Portland, and I'm sure in Colorado and other places, is just access to capital, right? Like if you're in
Yeah.
San Francisco and raising money, you can raise from just people who live within a couple of miles of you, and you can go from seed to like Series G that way.
Yeah.
That's just not possible in Portland. And living here, before this crisis, I used to travel at least like every other month minimum, once every 4 to 6 weeks, I'd say. That has obviously stopped now. Nobody's traveling. And I think there was a trend. I could see companies, right? Like so many companies set up satellite offices in Portland. Some like us moved here. And I think that's just going to accelerate because people are going to be like, why am I'm working remotely in my house in San Francisco. I'm even notice anymore. And I think that we'll see a lot of that happening. Uh, at the same time, there's going to be, as you said, like what, there were 36 million people unemployed, right? So we kind
Yeah.
of have to dig ourselves out of that hole a little bit. But I think the smaller to mid-sized cities with a good quality of life and decent infrastructure are going to come out of it better.
Yeah, I agree. All right, couple questions coming in. I told you this was going to happen, so
Oh
I'm
yes,
glad.
totally.
All right, so Sushant is asked, "Hey Shamir, how does Sila challenge blockchain fund transfer orgs like Ripple when it aims to replace ACH?"
So I see a lot of different blockchains and specifically
Yeah.
Ripple, right? Like what they're beginning to do is they specialize in solving one set of problems, right?
Mhm.
And from Ripple, from what I understand, is trying to solve the global interbank settlement problem.
Yeah.
So if you've done Swift or wire transfers and you know how the back end of all of that works, it's a bunch of correspondent banks, mostly in New York and London and Singapore, who just have accounts with each other, and there's Nostro, Vostro accounts, and it's just once you get deep into it, you're like, this is how trillions of dollars are moved around the world. And I think that is where Ripple is focused, and I think it quite shines in that space, right? Just say,
Yeah.
hey, everybody's already connected via Swift, but Swift is just a messaging network. How do
Yeah.
you settle all these Swift transactions? Settle them over Ripple, and I think it works well for that. I don't see us as replacing Ripple or competing with them in any way. What we want to do is be the sort of the programming layer, right? So maybe another analogy would be like we want to be AWS to Ripple's, I don't know, SMTP, right?
Yeah.
And so I mean, we are on Ethereum right now, but we always designed our platform to be sort of blockchain agnostic. I expect in the next 18 months, we'll add support for a couple of other blockchains. And Ripple might very well come along, right? Like if we get a couple of customers who are like, hey, we want to use Sila for, all the goodness of Sila, but then we want to settle this particular chunk of our transactions over Ripple. I'm like, that's totally fine. I'll figure out how to connect into Ripple and issue the Sila token on Ripple and transact it there, right?
Yeah.
Ultimately, I see Sila sort of, I look at it as kind of like the top 200 payment systems globally, including ACH, including Wire, including cards, but also including like Ripple and Stellar and other blockchains, and just being like, I want to be the glue layer that connects all of them.
So another good question from Sidrahar. Sidrahar, if you don't follow Shamir, oh my God, you talk about somebody who has got way too much in common with you, Shamir. This dude thinks like you. Good question though,
Oh,
because he's a founder based in San Francisco. What does
cool.
having a cryptocurrency foundation under the hood do for you in terms of advantages in product offering and scale?
The biggest one is just speed of iteration and specifically
Yeah.
speed of rebuilding your backend funds flow, right? Like there's this joke, right? Like, and I think Stripe really epitomizes it. Like when beginning painters get together, they discuss colors and lighting. When experienced painters get together, they argue about the price of turpentine.
Yep.
So when you and Stripe calls all of its internal systems turpentine, by the way, for exactly
Love
that
that.
reason.
Love
the
that.
the the dirty underside of kind of like building fintech and payment systems is ultimately you get to this thing called the funds flow, and you're like, fine, I have money coming in here at this bank and I need to pay it out to this broker dealer, and then some transactions need to go here. How do I connect all of this up? And then you end up with like settlement accounts and operating accounts and FBO accounts, and just figuring out how to just sort of take money from here and get it over there. The backend programmability of Ethereum really shines when you want to do things like that, right? You're like, hey, I want to take money from Sam, but not just from Sam. I want to take it from Sam and five of his friends. I want to let them create a pot of money. You can call it an escrow account, or you can just call it a pot of money and put it together and then apply some rules to it and say, once Sam has contributed 500 bucks, he can withdraw up to $1,000 from the pool. But once he withdraws 1,000, he has to repay at least 750 before he can withdraw anymore, right?
Yeah.
And this is really, you just built sort of like a micro insurance thing. And there's no reason you can't do it in sort of, I don't know, traditional Java or Node app, but doing it with a blockchain, it's just, you're replacing like 5,000 lines of code with like 200 on Ethereum. And we have a startup on our platform that's doing exactly that, right? Allowing customers to sort of create these small pools. They call it friend endowments. And so that's the sort of innovative stuff that you can build and ship so much more rapidly with a programmable backend that you can't with just the traditional ledger that we had. It simple, and it's great, but it's totally private and it's only accessible to the company that runs it, right?
Yeah. So at the top of the show, again, I've said this, that you've been doing this for a long time, one of the OGs of the space. And I knew a question would come in on this. This is coming from Jane Barrett, another serial founder. But
Oh, I know, Jane.
yeah, we love Jane. And I'll send out after a quick link to everybody. You wrote a Medium post, I think maybe back in 2018, about kind of the founding story of Simple, right? Just a simple email chain that you got from Josh Reich to you and to Jeremy saying, this was I think the very first line. What would it take to start a really boring, simple bank? I like Jerry's reply to that was oi, regulation. Starting a bank is really hard for that reason alone, but y'all did it. That's a great. I love that simplicity of that Medium post that you did, by the way. But I'll push that out after. So Jane asks, because again, another Sila founder, given how long you've been in the fintech space, does he see more growth in the neobank space with heavier focus on value-based affiliation like Aspiration, or continuing in the differentiate very experience realm?
I think neobanks. I think this crisis has been a boon to neobanks.
Yeah.
It's a boon to everybody online, right? Like I think
Yeah.
Stripe. I haven't seen numbers, but I'll bet Simple, Chime, Vero, all of them are growing gangbusters right now.
They're doing well. We've had Varo on, Colin on. He
Yeah,
said it's been unbelievable, the growth that they're
I can
seeing.
totally believe it.
Yeah.
And I think that's great. I still think that at some point over the next few years, we'll see a bit of like consolidation. A
Yeah.
lot of, players are just like, Me Too players, which I don't think they've differentiated themselves enough. And the ones who have scale will just suck up so much more funding and just kind
Yeah.
of like come out of this crisis so much stronger. That said, whether there's economies of scale in offline banking is arguable. Online, I think there's some, but again, I don't know how strong they are. So I don't know if we'll end up with like five neobanks. Obviously, traditional banks in the US we have like 5,000, right?
Yeah.
What I do think we'll see is a lot more sort of embedded banking or embedded finance. And the example I think is Shopify announced. I mean, they did so many announcements earlier this
Oh
week.
my
But one
God.
of
Yeah. This has been
they
Shopify week. God.
yeah, it has been, right? They did the Shopify Balance, I think it's called, which is
Yeah.
really business banking embedded within Shopify. And if you're a big Shopify merchant, you're a small merchant which does a lot of volume on Shopify, it's a no-brainer because of the the smoothness of the integration. I haven't seen the product, but I assume it'll be awesome when it comes out. And I could see them taking, taking up a significant chunk of space. The rumors of Amazon have been around for such a long time.
Oh my God.
I'm
Yeah.
just surprised they haven't done it yet. And I think that's where you'll see the next wave of neobanks, is that they won't even be call themselves banks, and a lot of their customers won't even think of them as a replacement for their Chase account or Wells Fargo account. And yet a lot of the transactions and even some of the balances will start migrating to those platforms, because the experience is just embedded there and it's just seamless. And I think that was the original vision of Simple as well. As like, banking should be totally reliable, totally boring, and the only part in which it should intrude into your life is to actually help you solve problems, right? Whether it's
Yeah.
managing your expenses and sort of like keeping track of what you want to do, the safe to spend, and all of that. That's the value add of banking, right? Like just holding your money and processing payments. That I think will get embedded into commerce.
So I've got a couple more questions that came in, but we're running out of time. I'm going to send those questions over to Shamir, and I'll let them know, the person on LinkedIn who had sent them, so you can answer them. But great questions. I'm going to be selfish though and throw in the question I've asked everybody this week, and I'm very curious the answer I'm going to get from Shamir, because again, serial entrepreneur, and coming at this in multiple different ways. Every company you've started has been unique and different. So coming out of, I don't know if to say coming out of, with COVID and what we're going through, and what we're seeing, is there anything that has surprised you? If you think there's anything that is going to really see a tipping point happen. We had MasterCard on earlier in this week. We had Kush at MasterCard, and he was talking about contactless, and the volumes that they're seeing right now. So I'm curious from you. So maybe one or two things.
I think for me, the biggest thing is that shocked me in this entire crisis has been the Fed. The Federal
Yeah.
Reserve, in terms of like quantitative easing, everything they have done more in sort of 6 weeks, starting from mid-March, than they did in the previous 30 years.
Yeah.
So many things that I would not have thought possible just happened, right? Like, and they happened so fast, one behind the other. And in fact, the Fed is what has kept the economy from total collapse, I suspect, at this point. So hats off to them, right?
Yeah.
But I think what people don't realize is, I mean, these are all back-end interventions, right? Like buying corporate bonds and bailing out, and that's, it had to be done. I understand it, so that's all good. What I think will also end up happening as we come out of this crisis, I suspect we'll see a sea change in regulation. Especially, I mean, the UK is an exception, but especially in like the world, in the US and in Europe, regulators haven't been leading the charge on online innovation, right? It's been more of, watching folks like Simple struggle and break through, and then seeing the consumer demand and kind of grudgingly acknowledging that, okay, maybe things need to change a little bit. I suspect that's going to change a lot faster now, and the just the numbers now are going to be such that you're like, hey, online payments increased more in 6 weeks than they did in the previous decade, and now you can't say that's a small part of the industry anymore, right? Like, this tail really is wagging the dog now. So you as a regulator have to start learning and getting good at managing that, right? So I think you'll see a lot more innovation happening, because it has to, and you'll see the regulators be a lot more supportive of that innovation once we're out of this crisis. And I think we'll see more change happening there, not at the 6-week pace that happened in March, but more, I think, will happen in the next 2 years than we thought possible in the next decade.
Man, that's a good answer. No, I'm surprised no one has said that. And here's the thing for folks that don't know Shamir well. What I love about Shamir is he'll speak his mind, right? If he thinks that, like, the Fed or the SBA, or you take your pick, regulators are doing something, he will go out on Medium and he will write. And it'll be, especially coming out of you, I think that's just and I agree with you. I think it's been amazing in a very short period of time what the Fed did. And folks, believe it or not, we're out of time, man. This thing flies by. So Shamir, best place for people to find out more about you, Sila.
Our website, silamoney.com, and Twitter, where it's at silamoney and at Shamir _K.
And Shamir will reply to you He
Oh,
is
yes.
that's one of the best things about you. All right, everybody. Thanks, man. Monday's a holiday in the UK. It's a holiday in the US too for our producers. So we'll be enjoying the sunshine with social distancing, of course. We will be back on Tuesday when I'm joined by Zohar Goshen from Medici. Again, if you know someone who'd be perfect to come on the show, don't hesitate to reach out to me. Hit me up at Twitter, Sam All, or at breakfastshow@11fs.com. Everybody have a great weekend. Shamir, thanks for being on, man. It was fun.
Thanks for having me. Have a good day.